TGIF, everybody. Hi, Kevin. How are you? Big day yesterday, and I think that FACE and Forex Analytics gave you some great ideas this week. And this was one of my better fades after the Fed, USD CAD. And we were talking about it during the session um, down here after it negated the throw over. I think it's just beginning. Okay, I think it's just beginning. Oh, Canada, and we could thank the $5 sell-off in crude oil. It may bounce, but still looks pretty ugly to me. And the dollar still hasn't broken out through the 92 level, but it's trying. Sure looks like a flag to me. Here's your flagpole, 89.70. So that's 280. So 280 from 92 is 94.80. That's up here. Okay. And also the S&P fade was better than the NASDAQ. If I had, listened to Blake, that was the weak sister. So this was a good fade from Jerome Powell as well. And then the one that's paying me the least, but I'm up about 30, is cable. And I think cable's going to break down maybe next week. So I was lucky this week. Interesting, the yen never made a new high up here. And I talked about yields beginning that they were overdone and they could come off. And that's what they're doing today. Is this run over? I would say no. And does anyone know why I say no? Thank you, Raymond. Hi, Sinatra. Because this high right here was still confirmed. It's a confirmed high. And yesterday I think I forgot who was asking me about the dollar. Thought it was bearish a dollar, and I've been talking about that we had this confirmed high in the dollar, kept me constructive the dollar. Okay, something I'm looking at for next week is starting to get closer now. We're starting to diverge on the 4-hour and daily, but not quite yet. Well, on the 2-hour, but it's a little under here. I don't think we're going to get a big turn on a Friday. Remember, don't try and make your weeks on a Friday. Actually, my week was made on Thursday after the Fed. So fading the Fed was definitely the right thing to do. The metals came back pretty good yesterday after the sell-off with the Dow held 1720. Still think that it's possible, if I'm right about the dollar, I don't know, maybe gold rallies with it, that this might have been it. So I mean, if you want to be short gold, looking for lower numbers, new lows, you're short against a high of the move, 1757 or so. Actually, silver, same type of thing. Are we going to keep grinding higher? I don't know. But I'll tell you, the thing I have really a lot of conviction on is this Canadian. It's really just started because we're not even at the wedge line breakout, which is, look how this moving average. It looks like it's a 200 moving average. That's a 50 at 2660. That's where the wedge line is, and where I have the wedge anchored would be the target. That's up there around 134. So buy dips in USD CAD. Okay. And I think that's about it. Yeah. Like the dollar, yen, maybe we'll still have one more shot to sell the yen if we, I'm very surprised. Look at all these attempts here in the end. 109.36, that was a new high, but didn't take out the high. That was 32. This was 30. So you think there's some stops over 36? Not saying they have to get them, but that's what I'm going to wait for. I still wanted them to clean out all the shorts that are top picking it right here. And when that happens, because we've moved sideways on most time frames, we won't get confirmed highs like we had here. This is why I was looking for a new high, because of this. And we just fell short all morning. But if the confirmed high in the 10-year is right, there could be one more blast up in US dollar yen. On Fridays, I just start thinking ahead for next week and do a little book squaring. And rarely, unless there's an NFP, do I look to trade much on Friday. So hope everyone had a good week. Who had a good week? Give me a why. Sinatra did? Okay. Monica did? Good. Paul, Arena, and Jane did? Congratulations. That's it? Out of the hundreds of people, average? Well, Paul, you know how you move it up from average to above average? Is perhaps, I don't know if you're a subscriber, but this might help take you from average to above average, right? Have a lot of pattern and plays that are working. Canada, Swiss, you know, you are a subscriber. Okay. I like Fridays for subscribing because you have the whole weekend to get the feel for the website, navigate it, see what all the features are, download the mobile app, etc. Who's going to join today? I'd like to see one person who we helped this week say thank you by becoming a member of our community. And I know we helped a lot of people this week. Okay, well, join again. Sign up your family. Okay? It's like when you're a Cub Scout, Boy Scout, you sell all your stuff to your family, not just one person in your family. All right. Well, anyway, um, I really think this is the best team on the net. Okay. So, uh, you know, do it for yourself. We'd like your business, but we don't need it. Hi, Arena. Yeah. Happy Friday to you too. All right. Blake, how are you, man? Your first week adjusting to the new time change. Congratulations, you made it.
I made it.
You
Only
made
7
it, man.
months to go.
Looks like we made it. Something like that, anyway. You got
7
through it.
more months to go.
Yeah,
So you're excited about the dollar Canadian. I'm
yeah.
actually excited about both the dollar Canadian. I think the dollar Canadian created a, a good low this week. We have retail sales coming out shortly, so
For
we'll see how
Canada.
Canada responds to that.
Yeah, okay.
Yeah, I mean, Canada's had some great numbers, and that's one of the reasons why the Canadian has been such a strong currency. And then obviously crude. Now, crude's fall was pretty epic yesterday. What do you think about that? That was like, wow! I can't believe it
Yeah,
was down 10%.
yeah. I
That
thought it
was
would
massive.
get there. And, that's something else we've been talking about. Steve Volge pointed out the crude top a couple weeks ago. I showed the divergences a couple weeks ago. We all felt down. And, you know, there were several rally attempts that failed that you could have gotten on board for that. But yeah, that was
Yeah, and
and Blake, do you think it's
think it's
because the
kind of
explanation I heard was just because COVID is worse in Europe was part of the reason? for the
Yeah, I
crude
mean,
flow?
people are feeling there's like another wave,
Yeah.
but
Okay.
I mean, regardless, and 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 sorry, I'm
You have
actually
allergies?
I've got allergies. I went and played pickleball. You guys ever play it? It's like it's becoming really quite popular
Yeah.
here.
For older people play it.
Yeah, they say that, and that's what I was thinking. So a friend of mine, he's a fire chief. He's in here in Scottsdale. He's 50 years old. He's basically my age. And he was my youngest son's soccer coach like 7 or 8 years ago for a number of years. Anyway, he has a pickleball court in his backyard. He converted a tennis court into a pickleball court. So he invited myself, a few other friends. There's four of us, and he's like, "Hey, let's play pickleball." And I play tennis, but I
Yeah.
was like, "Oh, pickleball, that's for old people." Yeah, that's exactly what I said. And
Yeah. It was a
uh,
workout.
I got a great workout. Oh my gosh! But it
Yeah.
was, in his backyard. It's got a bunch of vegetation, and so
What kind of pickles do you use
what's
for
that?
the ball? What kind of pickles? Kosher, Clausen, dill? What kind of
Wiffle,
pickles?
wiffle. But I'll tell you
Uh,
what, it was great. After about an hour and a half of that, of going, I mean, the guy, the fire chief, he's literally my age, and I mean, we are almost exactly the same age, and he was like Spider-Man on the court. I mean, the jump smash shots, and I was like, wow. But boy, I got my butt kicked after an hour and a half. Anyway, so my allergies, if I'm sniffling, that's why. Okay, so let's talk about crude. So crude, as you pointed out, it was divergent up here and looked
yeah.
like it was rolling over. And
Boom.
yesterday, in our chat room here, if you guys want to know what the Forex Analytics chat room looks like, this is it. All right. And you can see this is just all of us chatting this morning, right? So, that's since
A lot of charts.
and that's when I got up 4:08. That was when I first got in front of the computer. That was just an hour ago. That was just an hour ago. You can see, this is on a Friday, right? So I'm going to take you over to the files list, and you guys can see the yesterday. Okay, this is crude oil, and this is yesterday morning, and I was like, hey, crude's coming out of this triangle pattern,
Yeah.
right?
Yeah.
And you can see
Sure
what
did.
happened, right?
Yeah.
Yeah, it broke. I mean, it broke down. So if you're wondering, what happened to crude, I feel it was technical. It was coming. We've been mentioning, and I think I have it here too.
The Forex Analytics chat room broke the market.
Yeah.
Kind of like those, GameStop people. Only
We were really you can see 63.70, 64. We've been talking about this major support all week, basically. Crude is setting up in a triangle pattern, and a breakout may happen following the FOMC. We've been on crude all week, and then it finally just broke through 64, and then it's tumbling. Now we hit the 50-day moving average yesterday and bounced right there off of that $58 level. But I'm going to tell you guys, you should be watching it because it's heavy. And with if you guys are focused on the Canadian today, the dollar Canadian, which I am too. I'm long dollar Canadian off of these lows, and I agree with you. Everything as you said, Coach. We have this wedge that really looks like it's going to break out. Anyway, if you're focused on crude and you're focused on the Canadian and also the U.S. dollar Norwegian krona, you got to be keeping an eye on crude, because if crude
Yeah.
continues lower, we break through $58, we're going to go higher. Now, you said you heard all the excuses about what why crude's going down, and I know I've mentioned this a few times over the last couple of weeks, but I just recently noticed how expensive gas is, and I mean, I think I was telling the story yesterday, I can't remember if I was telling it during this webinar or the daily roundup a couple of days ago, one of the two. Anyway, I was talking about how, I usually gas up the vehicles. I try not to leave it for my wife. I try, even though she drives way more than I do, because of her business, she's all over town. But I try to gas up her vehicles. So I didn't really notice the rise in gas prices up until like a month ago or so. I gassed up the vehicle, and I'm like, man, it felt like the last time I gassed up our truck, it was like $40, and then now it's like $60, and I was like, huh. And I usually I gas up at Costco, for those of you that are not in the United States.
That's the cheapest gas in town.
It is here too. So
Yeah.
it's right. Costco is really close to where I live. It's almost as close as just
The guys in Greece will laugh that we're complaining about gas prices.
Yeah, I know. Most people
$60.
would laugh, but I'm just saying that I noticed it's a noticeable change, and that's the point that I'm trying to make, is it's noticeable. From if you're talking about from a consumer standpoint, because it's something I really normally don't pay attention to. But I remember about a month ago, I gassed up the truck, and like I said, last I was thinking of it, it was like $40. Now it's like $60, and that and I'm like, wow, that it's much more expensive than I thought. It was one of those. It was enough of a jump where it actually caught my attention, which normally things like that don't. But I'm bringing it up because we've seen this massive move in crude oil, and although crude and RBOB is not a hand-in-hand correlation, they do move close. And so anyway, with this rise in crude, I'm sorry.
You know what they say about retail prices, even if crude goes to 40, that retail prices go up like a rocket and come down on a parachute.
Yeah, I mean, that's
right. They'll keep the margins now, if it comes down.
It'd be nice. I actually had to put gas in one of my vehicles yesterday, and I'm like, too bad it's not in like directly correlated intraday. That'd have been nice. But anyway, so I don't know why I'm even bringing this up, but I think I'm bringing it up because crude looks weak. And if it continues to stay weak and trades closer to $50, you got to watch these crude sensitive currencies like, the US dollar, Norwegian krona, the dollar Canadian, that as Dale pointed out, massive resistance at 126, but we break above that, we break out of a wedge, and you can see this bull flag pattern that's developing,
And there's still so many shorts in there, Blake. I looked at DSI, it was still 85, so that tells me there are plenty of people to squeeze on this trade.
Yeah, it definitely is still, the sentiment is extreme. So anyway, but one of the things that I think that we also have to pay attention to is this move in yields. And maybe Steve and Stelios, we can talk a little bit about the move again. I know we've beaten it up with like crazy, but yields still look strong. I know they're pulling back, maybe a little bit of extreme sentiment in the bond market. DSI for bonds have been 9 and 10 respectively for, the 10 and 30 years. So, maybe we're seeing a little bit of a bounce in the bond market, a little bit of pullback in yields as we hit the weekend. What do you guys think? And good morning.
Good morning, Steve.
Good morning. I think,
good morning, guys.
I think we're just in this, yields obviously have broken out, but they're not galloping higher. So we're like a wait and see mode. And I think you're absolutely right about DSI. There has to be a pullback at some point, but it looks like they're broken higher and they're staying higher. So eventually they're going to have to matter. But unfortunately, they don't matter yet. When do they matter? That's a good question. I thought we would have already seen some kind of a reaction from equities, but clearly not yet. Maybe the market.
See this, Steve? This is the 30-year yield, and maybe Stelios, you'd find this interesting. If you look at the highs of 2000, this is the 2018 high to the spike low post-COVID lockdown low. We are basically at the 618, key golden fib level right now. And I know a lot of people, and I tweeted this out yesterday, and this is very true. You think something gets to a level where you're like, no way it's not going to break through here. But things can go a lot farther than you believe and that you ever think. And that's really important to know when you're trading. I look at the 618 and I go, well, this is some pretty good resistance in yields, but what if we move to, 260, 280 on the 30-year? Anyway, Steve, I'm not sure if you saw
that. Which thing, mate?
Oh, the 30-year yields here.
Yeah.
I thought they were stretched a while ago.
I mean, you could have said they were overbought back here at you could have said on this spike up to, towards 234.
Yeah, we can say a lot of things, but it's still a manipulated market. Otherwise, prices would have never even reached the levels they did. The problem is that it remains a manipulated market. You know what I mean?
The problem is that you still have a huge buyer, which is the central bank.
Exactly. If that buyer went away, I would be so bearish.
So, with that being said,
I don't think they're doing a great job of supporting the market, or it wouldn't have, the bonds are the only market that, when they came in to intervene, have taken out the April low. So if whatever they're doing, I would say it isn't successful. They're getting run over. So, and talking about saying dovish only feeds bond vigilantes more ammo, because, of course, with a booming economy and loose monetary policy, who the hell wants to hold a bond? The only thing I think that would really get it going would be a big sell-off in risk. Now, that would help.
There's definitely no legitimate buyer of bonds, if that's what we're talking about. By legitimate, I mean a buyer that actually buys them, to hold them.
Yeah,
exactly, to keep and, collect coupons, and there's no such a thing.
But when you look at that chart, can you say the Fed has been successful?
Successful?
Successful at keeping yields down.
Oh, absolutely.
And
they've had a huge.
I'm talking about since April.
Impact.
April.
Oh. Yeah, but don't forget, right? The Fed hasn't really expanded its balance sheet for quite some time, and that's a very important element. But as I've said months and months ago, you remember that, Dale, I know you do because you have a very good memory and you're always here. I expect the Fed's balance sheet to explode higher once again sooner rather than later. I think that within the next few months, we're going to see an explosion of the Fed's balance sheet up to 10 plus trillion. And I think during that phase, we're going to see once again, guess what? Bonds being compressed, right? Because they're going to be back in the market. As simple as that.
I saw a quote by Peter Bookvar, and I think someone was asking him, when will the Fed change their rhetoric to that they might have to begin to taper? And Peter said that they probably won't do that till they get run over. And it looks like they're getting run over.
I don't think we're there yet, because as I said, they will definitely be expanding their balance sheet in the not so distant future, right? We know that as a fact.
Yeah.
And that at least temporarily should, keep a lead on prices.
Yeah. Well, I don't know. Interest expense for the U.S. is almost quadrupled in 8 months or whatever. A year.
They'll just issue more bonds and finance it.
Exactly.
We have our friend Jay who's asking, can gold and silver go up with DXY while 30-year moves lower? we have had times where metals go up with DXY. We've had times where metals go down with DXY. So yes, it can happen. And we've said this before on these webinars. I think yields, the dollar, stuff like that, they are short-term. They have short-term effects on metals. Yes, they can move them, of course, but it's short-term. In my opinion, long-term or medium-term moves is only the change in money supply, the Fed balance sheet, all that. That's what moves metals, in my opinion.
Correct.
Obviously, if they mine an asteroid and bring in 1 trillion tons of gold, then that's going to make a difference.
Yeah,
But, I
That's
don't
the
see
wet
that.
dream of like the anti-gold, but we're so far away from even going to Mars, right?
Come on, yeah, that's not in our lifetime or our kids' lifetime. So anyway,
Yes,
that's
Can they
exactly.
mine Bitcoin off an asteroid?
no, they'll just make
That is a very good question.
they'll just make Bitcoin too. Bitcoin too. This time it's personal. Anyway. Yeah.
Hey, guys, I want to point out something that how excited, I mean, utterly
The VIX.
giddy the market got the day
Yeah.
after the evening after FOMC, the VIX broke back below 20. The market was so giddy, and I can't remember if we talked. It's sometimes I lose track as if we talked about it during this webinar or we talked about it during the the morning edge.
Morning edge, yeah.
For our Forex Analytics subscribers. So and sometimes I can't remember. Did I mention this because it was really important? But some things I reserve for just the Forex Analytics clients. But I was like, don't get excited about volatility below 20 because daily sentiment index DSI was very extreme. We were at like 12 or 10.
Yeah.
And I'm like, man, that's a recipe for disaster. You got everybody pressing on risk on the day after the FOMC. Everybody's fading the bond market. Everybody's playing bonds to the long side, and we're going to see yields come down. And, everybody started, shorting the dollar. And I'm like, I don't know if that's such a great idea. But look at how volatility, even though Dale hasn't filled the gap that, you talked about.
It doesn't have to.
It doesn't have to, and it will at some point. And I always look at gaps, and I'm like, I don't think I've ever seen a gap not get filled, but I've seen them fill 6 months.
I've seen them years later.
Years later, right? I've seen that many a times. So
like the Macron gap when the euro bottomed.
Oh, it took 3 years.
Yeah,
3 years.
Perfect example.
Yeah. But I look at this, I look at volatility, and the one thing that I have to say is we are stubbornly above 20. And that is not a good sign for risk appetite in the future. Because remember, we based on long-term volatility down towards 10 and 12 long-term. And we have found a new base of support around 20. That means that whatever sell-off that we see moving forward in equities is probably going to be fairly aggressive because volatility is perched at a much higher level at this point. So anyway, it's just something I wanted to, point out that, especially as we head into the end of the week and you can see the dollar's on firm footing, the equity markets look a little vulnerable. And that's, I just wanted to mention that as we're bringing you guys a really special treat today. So I think he's here. Is he here? Is he here?
I don't see him. No.
Oh, well, then I'm gonna pass it over to you guys. You guys can finish up. But hey, no, you guys, guess what? Gregor Horvat's gonna be jumping in today. So he's gonna give you an Elliott wave view of the market. So Steve, I'm going to let you and Stelios talk a little bit about things that you want to talk about and not stuff that I just want to talk about. Because I'll talk about pickleball.
So
it's really quite fun.
Cars, basically. Okay, let's talk.
Yeah.
Sounds like a very good idea.
Never mind. No, I'm just kidding. So, hey guys, I want to say have a great weekend. Have a great interview with Grega today, Dale, and you guys enjoy his analysis. I'll be in here too. I'm just gonna mute myself and be listening in. So
okay. So well, not much today actually. We have Canadian data in about 10 seconds. So let's have a look at that first. Retail sales expected Core retail sales minus 2.6% month on month, and it's coming in at, drum roll,
minus 3% forecasted
is
and minus 2.6 for core forecasted. So let's see what we get. Better than expected, negative still, minus 1.1
yes,
and minus 1.2 respectively. So
yeah,
less bad
yeah.
than expected.
USD CAD is doing nothing.
Let's see
There
what the
you
CAD
go.
is doing. I doubt it's doing much, as you said. Yep, so far not doing much.
Yeah.
Yeah, so far not doing much for sure.
Okay.
Yeah, it couldn't
Otherwise,
care less.
yeah, it's been a very, very quiet morning. We had some retail sales out of Australia missed, but really, who cares?
Yeah,
I mean, I think the main issue remains COVID, and we seem to be having a third wave in Europe. I was reading that one of the regions of Germany are now, I can't remember which one it was, Nuremberg or something like that. Anyway, one of the regions, they're imposing now stricter lockdowns, as having made them looser like 2-3 weeks ago. So it is, unfortunately, it's still here, and it looks like there's a third wave everywhere, but Europe in particular seems to be a
isn't
little bit
that a good
vulnerable.
thing?
Why?
Huh?
More stimulus.
Yeah.
Yeah.
In
What?
the completely twisted,
Yeah. Well, we're not
logical.
getting checks here in Europe. Why aren't they doing it? They're doing it in America. I would love to have $1,400.
Why not?
Anyway.
Why not?
Yeah, but
That your kids will eventually have to pay. That's the only catch. Yeah,
yeah.
because
Yes,
all the chickens will come home to roost at some point. There is no question about that.
it's amazing, this ever increasing debt everywhere, and it's like they don't care. Oh yeah, it doesn't matter. A couple of generations down the line, they're going to have to deal with this problem, maybe earlier. But how can you do that? But anyway,
Probably
it is
earlier.
what it is.
Because it's becoming more and more mainstream that it doesn't matter, and the more mainstream it becomes that it doesn't matter, the more the acceleration of the deficits and hence the debt levels.
Yeah.
So I think we are getting to the point that it's spiraling completely out of control, and it's not going to take long before the markets wake up to the reality that they have to matter. I mean, there is a level that it has to matter, right?
Absolutely.
Now the question, what is that level? Yeah, we'll find out. Nobody can predict the exact level, but there is a level that it has to matter, mathematically speaking.
Yeah. Otherwise, we had yesterday Joe Biden calling Putin a killer, which was interesting.
Yeah, a few days ago. Yeah.
Was it? Yeah, and then he came out and said, "Yeah, I don't regret saying it." So it's interesting. And Putin replied and he said, "I wish him health." It's like a soap opera to be watching these things. But
because they're talking about his dementia.
Is the "I wish him health," the mafia equivalent of
I've got a contract on you.
Yeah. I wish you health. You'll need all the luck in the world.
How about here's a curse: may you make millions of dollars and spend it all on doctors.
On doctors, yeah.
Yeah.
Anyway,
markets.
Markets. What else to say about markets? For people who have been Forex Analytics subscribers, they'll know I shorted Euro Yen. I made the pip as well, and a pattern in play at 130.25, if I recall. That's doing well. It came up on huge.
It is doing well.
Weekly trend line resistance.
Yeah, it is doing well. First of all, it kicked out probably some of the people that shorted it at that evening star formation a few days ago. But yesterday's candlestick, an outside black candle, another bearish candlestick, like the third one in 3 days. The second one in 3 days. And it's now toying around with breaking this soft trend line support. In my opinion, if it does so, probably it opens the door for a move towards 127.50 to begin with. And, we see after that, because we break through 127.50, we open up a lot more downside. So, one step at a time, of course.
Yes.
At the same time, Euro Pound, a lot of people are trying to fade this move in Euro Pound, but Euro Pound remains extremely heavy and remains within this descending channel. As I've said though before, if you look at the big picture here. 80 to 80 is like the line in the sand for the long-term bias. So, as long as we stay above 80 to 80, you can make a very, very good case that we are in a prolonged, consolidation, in a prolonged, rectangle in a range, sort of. But below 80 to 80, then we're
Dragons
talking
here.
about a major
Yes.
breakdown in this case, and a major technical event. Hey, Grega.
Hey, what's up?
Good, mate.
Hello.
How have you been?
I'm fine, as
Good.
usually. And you?
Still nurses take care of you on a daily basis, or?
No, actually, maybe you need them
Yeah, very true, very true. I actually had them take care of me for 8 days. They were very polite and sweet and all. But my wife was coming on a daily basis. I wasn't smart enough as you did to go to another town and be alone with the nurses. So yeah, that's where I messed up.
Funny guy.
So why
Okay.
don't you take over the screen and show us what you have?
Yeah. I cannot share. You need
Let me
Because,
stop.
yeah.
Yeah. Okay, go ahead. Try again. If you don't succeed at first,
Okay,
there you go.
so firstly, maybe we can look at the 10-year US notes. As you know yourself, these yields are still rising, and it looks like that
Very
this
true.
trend may not slow down so easily, so fast. So I think that at least for now, it looks like that the dollar could continue higher. And in my opinion, like dollar yen, dollar Swiss, which were quite volatile and very strong to the upside recently, I think that those could continue even higher from current consolidations. So here on the 10-year US notes, I think that, of course, there will be rallies like we have seen here in the past, but maybe only wave 4 as part of this ongoing cycle that I think it's not over yet here. So even if whole drop
from what I see, you think that we are at the late stages of a wave 3 of C, right? If I understand
exactly.
right.
So
Yes.
I mean, it could also be in late stages of this very big drop from March of 2020 highs. But for now, I would just rather stick to this trend that we are seeing here from the start of the year and just look for this cycle to go lower until we see a completion of 5 waves. So I think that this is probably the most important chart to track and get the real feel for the US dollar in general. So if we go to dollar yen, okay, so firstly,
so you think we're getting closer? I see the long-term trend there. So you think we're getting closer to this multi-year consolidation of the Kuroda explosive move higher from 77 to 126, right?
Well, I'm still quite undecided here on a big picture on dollar yen because we are still actually in the middle of this range. And if it's triangle, as you know yourself, it's a very tricky to say if it's triangle in wave B or if the whole structure is actually a triangle within a correction. So it's a very tricky situation, but at least in the short term, I think that there can be more upside. I mean, these daily swings are, at least for now, much clearer to me. It looks like that we completed this complex corrective decline at 102.50 and we are now trading impulsively higher. So in that case, you would expect that the previous drop will be fully retraced. It means that there is even room for 112. Okay,
yeah,
and
very
also
likely.
what I like about this current trend is that if you look here in the middle, maybe even better the 4-hour chart, you can see that in the middle we have a very strong and sharp move in a very short period of time.
Wave 3.
It was an extended move that also took us above and out of this channel. So yes, it confirms that this was probably wave 3. And what I like about the current price action is that we are just moving to the right. not really aggressively to the downside, but only to the
Correcting in
right.
time, not in price.
Exactly. So I think that this is just a pause on the way up, and I'm looking for more upside here. Of course, there can be another dip, maybe towards this trend line support that was broken, this parallel line. And in such case, 108 could be a very nice support. So if we consider that 10-year US notes still have incomplete bearish pattern, yields could rise further. I think that this makes a very nice bullish case for dollar yen. So even if we expect stronger dollar, I would not be looking for dollar longs maybe against commodity currencies, because if you will compare dollar yen, dollar Swiss to Aussie dollar, you will see that you have much more sharper and clearer direction on those dollar yen, dollar Swiss pair. So
True.
here on dollar yen, I think that we can see a new jump higher. Since we mentioned dollar Swiss, of course, this one has a strong correlation with gold. And metals in general, either they will stay sideways or even pressure to the downside because of the yields. Maybe there will be another drop on gold towards 1660 based on recent developments. So dollar Swiss franc could find and attract more buyers here. I can see a very nice and extended move to the upside. That was just now pause on the way up. So I think
A
this
nice
is
flag.
a very nice flag. Yes, corrective wave 4 that opens and makes a room for a new high here. I think that if we can break and close above 93 today, this could be even
Will confirm,
more
yes.
upside already on Monday.
Yeah, true.
But even if we go to the downside, let's say that we reverse during the US hours today, and then we retest this 91.90, it's still, I mean, very good pullback on the way up. So in such case, you can also maybe compare this wave too. You can see 100 and
to the extent of wave 4.
And this comes in 180 exactly at this 91.90.
Yeah, at 91.90.
And you have also the 38.2% on there.
So nice confluence. Yeah.
I mean, sometimes it's not easy to recognize and say where exactly correction will finish. So
yeah,
I mean,
only in hindsight, when you see a new move that has impulsive characteristics, you can be sure about it.
Yeah.
That it has finished the correction.
Yes, or you just should have a proper plan, just maybe scale into the position rather than looking and trying to hunt intraday lows or highs, because it's intraday noise is much more tricky to trade actually.
What about the, it's not a big move for sure, but what about the move we saw yesterday lower in stocks? What do you think about it? Do you think it's also part of a small corrective move, or you're looking at something like,
you know, always when stocks turns to the downside, investors will try, or especially traders who are more short-term oriented, will immediately turn aggressively bearish. And in those cases, I think it's actually opportunity to look on the upside, and just be aware that stocks are still in uptrend. And if you see an uptrend and only 3 waves from the highs, there is no reason to fight the trend. So if we look here on Nasdaq, I think that we have a very nice pattern here. I mean, some will try to count this whole drop from February highs to March lows like a 5-wave movement. But in my opinion,
I don't think it
forcing the wave count.
Yeah,
so
I don't think it is.
Some would try to label this in that way. In my opinion, that's forcing the wave count.
First of all, because wave 5 is longer than wave 3. Not that that's impossible, but it's not the likeliest scenario.
Yes, but just to be more simple perspective, you have correction, very big one, exactly in the middle of that move. And normally when that's the case, you can assume that this was wave B that belongs to
B of a 3-wave move lower, yes.
And then you also have wave 4 quite big compared to current wave 2. So based on personalities,
it's not the likeliest scenario.
It looks like that was an ABC. Then you also can count 5 waves up here away from that low. And if we then also consider that the big trend is still up, and what are the chances that market will today see a very strong drop exactly from here and continue down into some big wave 3 or maybe even just wave C. Well, I think that there is much greater chance actually that we will continue higher after this current pullback. And that's primarily because of that previous drop that was very deep and in 3 waves.
There is also though the chance that this whole structure is a bigger correction, so not a more complex correction, and we have more to go to the downside to complete a more complex correction, because that's also a scenario. Just by purely looking at the S&P, which is like the more mainstream index, and looking at the last like 4-hour candles, I don't know, it looks to me like it's bear flagging in the short term. So you see, I don't know, this type of price action that we've had during the past several hours doesn't inspire me that we're headed straight higher from here. I mean, I don't disagree with anything you said, but this little consolidation, I don't know. I mean, you know, if I had only this, you know, if I could only see at the price action that has unfolded like the last couple of days, I would be looking to the short side and not to the long side. You know what I mean?
Yeah, maybe you're correct. We could obviously retest the yesterday's levels and make this pullback even deeper, but I really doubt that price action from the last 12 hours or 24 hours could impact the big picture.
Yeah. No disagreement
So,
with that. And
opinion,
the big picture is that the trend remains higher. Yes.
Yes, I mean, if you look maybe at maybe Nasdaq 100 technology sector will now try to catch some upside compared to the S&P 500, and we have seen this in the past. I know that when Nasdaq 100 started moving, it made some really nice gains to the upside, and I really would not be surprised to see this happening once again. I mean, here, as I said, we have a very nice potential 5 waves up, and now you have only 3 waves down right into this fifth zone support. You have also the swing support here from the previous wave 1 high and this wave 4 consolidation. So we are already seeing some bounces here. So if we can rally back
another thing, by the way, that is troubling me a little bit with the bullish case in the short term is crude, I have to tell you. So I would also be interested to see your perspective, in crude as we speak, because yesterday we had quite a big move to the downside. At the same time, you don't have it drawn there. I've been tracking the appreciation we've had after that clear 3-wave move lower that unfolded from like late August to when we bottomed at the beginning of November in crude. I've been tracking the appreciation following that in a perfect channel, which we broke through yesterday. So if you go back to the lows of November, ABC at that C, So if you go to that C, you'll see that it was a perfect channel which we broke down from.
Yeah, exactly. So now temporary could be bearish. I definitely agree here. We cannot fight this, but for now, we still have 3 waves down. And that's where the Elliott wave has the perfect patterns because it tracks the psychology. Everyone thinks that crude is now bearish. Yes, currently is bearish, but you need to make a step back and look at the big picture. No one will say, and only a few will buy at the wave C low because that's a psychology behind the waves. You see,
no disagreement there. So I'm also of the opinion. I mean, first of all, I'm very bullish crude in the long term. I've said a long time ago that I believe that crude is going to hit $100 again in the not so distant future. But within the larger context, which I'm very bullish, I also believe that crude can use like a deeper correction after such a prolonged move higher. You know what I mean? So I'm looking at a deeper correction. I'm not looking for a trend change to give you perspective.
Yeah. I mean, maybe we are already here in a wave 4 of this higher degree, and we will maybe see a pullback towards this trend line and then bounce. But I still think that crude oil, as you said yourself, it's now in a pullback, and that sooner or later we could bounce. Of course, for the short term, it could be, it may not be so easy to follow. Let's see what happens after this another drop that I projected here for a wave C of this 3 wave decline. So 57, 56, maybe that's the area where we could rally from. But if we see a bounce, let's say at the start of next week, back towards 62, I think there could be very interesting buying opportunities.
I think
of course,
we can
if
even
you don't
drop
want
down
to hunt the lows here.
I think we can even drop down to the previous consolidation highs, roughly at $54 having to do with crude.
Yeah, you are looking at this small one here.
Yeah.
Perhaps, I mean, they will probably also expand production cuts, I believe, through April. Now imagine that there will be lockdowns probably slowly removed as we approach warmer months. So in my opinion, demand will increase, and this could also increase the price.
Yeah, as I told you, I believe that price is going a lot higher. I'm not just sure that these are the levels somebody should be buying. I would be looking for better levels to buy. That's all I'm saying.
Yeah, of course.
What about gold and silver? You gave your general perspective before when you talked about a potential lower low, but I'm just like more interested in what your short-term like count in where we are at the moment, in especially silver. I mean, I see gold and the formation in gold is very clear in my eyes. I mean, we've been moving in a channel lower that's very corrective, but having to do with silver, I think the structure is a lot more complex. So I'm curious what you're looking here at.
Yeah, I mean, still here.
Expanded flat.
Yeah, could be a flat if we drop back towards 21.60 when looking at the structure from August highs, or maybe if we just hold these levels and just continue to the right rather than deeper in price. I think that this could be also a triangle, but both are corrections. I mean, for the short-term structure to give you a few with confidence, it's actually very, very hard because
it is very hard
to read. Any clear evidences.
It is very hard to read.
Story if we see, let's say, a drop towards 24 and then we rally with impulsive fashion back towards 26, then triangle would have a much better chance, I believe. But for now, you just have to be aware that even 2160 is still possible here. But I think that if this price will be reached, it will be maybe a very good buying opportunity, like from an investment perspective.
Okay, what about gold? A lower low, more likely there, I think, from the structure.
Gold, I mean, still, let's remind ourselves that we are here in corrective phase.
Oh yeah, absolutely.
But very hard to say if the low was already been put in place here or no. I mean, we didn't overlap this 1760. Now, if you, I'm not sure if you know, but I highlighted 1760 few times, like a very important level because
it was
the area of a former wave one here, swing low, and also at the same time this trend line resistance. And we
I don't know why, but your second count, my intuition tells me that's more likely.
Yeah, I mean, I really love the second count.
Yeah, me too. A lower low, a lot of people don't expect that, something like that.
And if we consider the yields are still on the move, I mean,
I think it's likely. Somebody's asking, by the way, about Bitcoin, and cryptocurrencies are in the spotlight. There is no question about it. So, what do you think about what's happening there?
Let me just switch the window here. Okay, so Bitcoin, I mean, it's very bullish, but I still think that in this environment, it's unfortunately only a few people really realize that there's much bigger downside risk than upside potential, in my opinion.
Of course, the risk reward is stupid buying here, really stupid.
So looking from an Elliott wave perspective, we touch these important fib levels for this wave 5 that could complete the higher degree wave 3. I'm not sure if we'll see a retest of these levels once again, but I really assume that 65 to 70,000 is very important level for where we could potentially reverse down or at least sideways into this higher degree correction. Now, even if we retest these highs, then maybe you would potentially have a deal with the wedge formation.
An ascending wedge. So like, another higher high with divergence probably. and then at least a retracement of the wedge back to, what is it, like 44,000 or so.
Yes, around there. So I think that
or if that's the ascending wedge, then we're talking about a move back even towards 25,000, right?
I mean, when this wave 4 kicks in, it can retrace back to the area of a former wave 4.
Yeah, and I'm pretty sure, as you know, it's knowing especially how cryptos have been moving, the move lower might be brutal. I mean, in speed, and everything, momentum and everything.
Yeah, I mean, Igor just mentioned that he identified plenty of bearish divergences across different indicators. Yes, that's normally the case when you're looking at the trend that keeps rising, that keeps takes the price higher. So it's really hard to rely on divergences, but it's much better.
Yeah, of course.
If divergence you try to do a combination with the other techniques.
Exactly, divergence is not a timeless signal. It's just there to remind you that when you get other factors as well, it matters. But on its own, trading something counter trend on divergence alone, it's the easiest way to get broke, literally.
Yeah, because it's not very good.
Yeah.
It just tells you that you are still in the extremes, but
yes.
This extremes then always moves to the upside.
Yeah.
So I mean, Bitcoin, just even if we want to be in this cryptocurrency space, there's a very simple approach to those. Just try to wait on a big pullbacks like 40-50% drops and then consider to reinvest. Because of volatility, those very big pullbacks could easily occur.
And as I said, they're very liquid, so people should be aware that that type of a move, like the one you just explained, can happen even in a very short period of time in cryptocurrencies.
Yeah.
So they can literally be like 40% lower in a week.
Yeah, of course, for a weekend. When the futures market,
even that.
when the futures market is closed, and definitely just
even
don't and let traders do not follow someone who is very important and has a very big influence like Elon Musk talking about Dogecoins, because I can see that over and over again, market did the opposite in just a few sessions later.
Yeah, it's buy the rumors, sell the news kind of a move.
It's not so easy to trade. I mean, it's
when it becomes that popular, or for example, the funny part is that Tesla reversed lower after a long period of time of only appreciating, like immediately after Elon announced that it had actually bought Bitcoin, which is really funny because Bitcoin kept going higher, but Tesla actually topped more or less at the news that he bought Bitcoin.
Yeah, and if I'm not mistaken, Tesla actually moved to the downside with 5 waves.
Oh yeah, quite impulsively. Yeah, so probably we're at a much bigger move lower, or whatever. Yes. Okay. Baroque says ETH 65% lower in a day on Kraken exchange. Yeah,
today.
In a day, yeah, it has happened. He's right. I mean, these are the things
in 2017,
and that is why, 18. And I don't want to keep repeating myself again and again. These cryptocurrencies, I mean, they've kept rebranding them as different things. Initially, they wanted to brand them as currency, then they realized that's not the case. They rebranded them, they rebranded it. Now the new kind of brand that seems to be sticking is like digital gold, in the sense that there's store of value. There can be no store of value in something that's that volatile. As simple as that. Store of value is something that stores value. With Bitcoin, you have no idea what you're storing. I mean, value tomorrow can be double or half.
Or less.
Yeah, or zero. I mean, there is absolutely no barrier, since it doesn't have intrinsic value, that can prevent it from going to zero. I'm not saying it's going to zero, but I'm saying that there is no real intrinsic value to prevent it from going to zero. So theoretically speaking, it can go to zero. Gold can't go to zero. Crude oil can't go to zero, at least not for if we're talking about crude, not for decades to come. I mean, because they always have utility, right? They always have actual usage. So if you're willing to get rid of them at zero, there's always somebody willing to take them off your hands because he can make use of them. That's not the same with cryptocurrencies. They're that just digital tokens that their only value is the hope that somebody else is willing to get them off your hands for a higher because they believe that they were going to find then somebody else to get them off their hands at a higher price, nothing else. So they're purely speculative assets. I'm not saying you can't make money being long. You absolutely can, but you need to be cognizant of the fact that they're the most speculative assets out there. End of story.
Okay, guys. Nice review, Greg. What a way to wrap the week with you.
Yeah. Thank you,
Start the
David.
week, midweek, any day is a good day to hear your thoughts.
Yep. When
Perfect.
I'm alone here in office, yes. Otherwise, I can join with kids. So
Where are the kids? Have they reopened schools there, mate?
yeah, they are in
Oh,
school now.
good for
the
you.
last-
Lucky you. We're waiting for the same to happen here. Crossing my fingers.
Really? Still not
Yeah.
open?
Nope.
I mean, it's funny. They opened here when cases started again to go up. So
No, nothing makes sense
Hey
anymore.
guys, just heads up. Sorry. The Fed just announced that they will end the emergency capital relief for big banks. Fed has excluded treasuries reserves from supplementary leverage ratio. So the SLR is being discontinued, and so that is
why stocks are tanking.
That's why stocks have just taken a little bit of a hit.
Yeah.
So just a little heads up, guys.
Okay.
Thanks, Blake.
We'll talk all about that in 15 minutes, Blake.
Yep.
Okay,
See
guys,
you
have
on
a
the-
great weekend.
You too, Steve. Remember, don't just count your pips, count your blessings, and go join the team in the Morning Edge in 14 minutes. Hope that we added value to what you're trying to accomplish this week. If we did, sign up. All right, Steve, have a great weekend, buddy. Greg, have
too,
a good
Coach.
weekend. Stell.
bye bye.
All right,
Bye-bye.
guys. Adios.